Hello traders and welcome to another video review. Today is Wednesday, January 8, 2025. Let's take a look at the Forex economic calendar for today. Asian session was quiet, very quiet, so we start with the London session. German factory orders and German retail sales were published already. Both of them completely disappointed the market expectations. The German factory orders dipped from minus 1.5 to minus 5.4%, and the retail sales are below minus 0.6%, way below the minus 0.3%, and of course completely mismatched the expectations, so that will have a big impact on the euro dollar. We're still waiting for the retail sales from the Switzerland. Then at 11 o'clock we got data from the UK mortgage rate, and the Bank of England Deputy Governor Woods will give a speech. At 11:30 we got German 10-year bond auction, and then we are entering the US session. ADP Nonfarm employment change is scheduled for release at 2:15. Then 15 minutes later we got initial jobless claims, and we got the Fed weather speech, and crude oil inventories scheduled for release at 4:30. At the end of the day, at 8 o'clock p.m. we got the FOMC meeting minutes data release. So the US session from the beginning to the end will be very important and very violent, because plenty of the important informations are scheduled for release. As you can see, all of the red dots means that they have high impact on the market behavior, which is why we need to focus today on the euro dollar and dollar related pairs. We are going to start with euro dollar, of course. Euro dollar for our chart reacting very badly at the news from the German retail sales and factory orders. Another let's say rejection of the technical resistance 1.0450. This time we even didn't went there. We touched 1.0437, so that's let's say like 13 pips below this zone, and right now we have a very special strong zone of the supply between 1.0437 1.0460. so this is a very important zone, because only if we break above this supply zone the pullback might get bigger, or market is ready to start some sort of the bigger correction or reversal. As long as we trade below this supply zone, the outlook remains bearish. The market is below 100 periods moving average on a 4-hour chart. We just broke below the technical support at 1.0345, so now this level is the resistance, and the other technical resistance at 1.0333 is now violated as well. A local low so far 1.0323. Where are we heading to? We are heading towards this low here, 1.0242. Momentum is below the level of 15. Now it's 43 points only, so we broke from the positive sentiment zone back towards the negative sentiment zone, and with negative momentum. Euro dollar bearish outlook. Let's take a look at the pound, because we got some data from the UK economy. As you can see here, this is again very good example of the technical reversal. What do we have here is movement to the upside from the lows of 1.2359 towards the high of 1.2530, and then the market hit the upper channel line and 100 periods moving average, and reversed bearish engulfing pattern at the top of this move. You can see here on a 4-hour chart, bearish engulfing pattern, confirmation, extension down towards the technical support at 1.2485. This support is violated right now. I'm changing this color to red, which means it's technical resistance. 1.2474 is violated as well, so this is another key short-term technical resistance that needs to be violated. Momentum is negative, 41 points only. The market is definitely moving lower. Very strong breakout candle to the downside. Next target for the bears is located at 1.2359. This is the low from the January 2nd 2025. British pound outlook bearish. What is going on with the US dollar index? As you can see on the daily time frame chart, let's just switch to the daily. There's a very nice movement to the upside since the end of the September, beginning of the October 2024. We keep moving higher, keep moving higher, keep moving higher, and this is the momentum that is in line with the expectations of the upward moving market. Momentum is strong, momentum is positive, and it keeps bouncing from the level of 50. So the dollar is gaining all across the board, and as it is today and as it was since the the end of the September, beginning of the October, basically since the decision of the Fed interest rate decision and the monetary policy statement. So today FOMC meeting minutes might be very, very interesting to take a look at this minutes, because important informations are there as usual. So let's just make it a little bit more technical. 109.44 is the technical resistance. Eventually the technical support is located roughly around this level here. We got the newest data roughly at 107.56, so that's the technical support. As you can see, very nice zone, breakout from the zone, pullback, and now we are ready to move higher on the US dollar index. I'm just wondering whether I can basically place a kind of a trend line here, if that's appropriate to have one. You can see sometimes we have a breakout below this trend line, sometimes we don't. Maybe something like this might be good. It's almost hit here, there's hit, there is a hit, so possibly this line might be quite accurate. And as long as we trade above this trend line, the outlook remains bullish. We are way above the simple moving average, 100 periods simple moving average at 104.21. Bullish outlook for the US dollar or across the board. So if the US dollar is going up, what should go down? S&P 500. But so far we don't have any kind of a indication that S&P 500 wants to move lower. Moreover, the technical resistance located something somewhere around the level of 5,600 and 100 is still the key long-term swing high, and right now technical resistance. The local resistances are located at 5,800, and there is one from from last week, sorry, 5,830. So those technical supports are just above the 100 periods moving average on a daily time frame chart. But this kind of a line that we place here, for example, like that one here, and let me just place one more, might indicate that we are making some sort of the triangle. So we are not definitely completely done with the upward movement. Maybe there is some kind of a triangle in progress right now, wave A, wave B, wave C, wave D, and that might be wave E here. So the triangle might be completed with this kind of a momentum. Of course, the indication is to the downside. However, the triangle is a trend continuation pattern, so we should expect breakout to the upside, unless we go below 5,800 technical support and below 100 periods moving average. Then this triangle is completely invalidated, and we should then expect the market to hit the level of 5,700 points. And last but not least, let's take a look at the Bitcoin, because yesterday on a daily time frame chart, we've been talking about it. We've been talking about this technical resistance. We got big bearish engulfing pattern. So we got the all-time high and swing high made at $108,362, and then another swing high made at $102,698. Big bearish engulfing pattern, completely disregarded this technical support, so it's completely not relevant for the market. And right now RSI is 48 points. It's not yet that much negative, so if we see some kind of a bounce today, that it's possible that we see the momentum hovering around the level of 50. However, this kind of a bearish engulfing pattern is telling us that the market is under the bearish pressure. If there is a red bar today, daily bar, there is an extension of the bearish engulfing pattern, and we could see again test of the $91,000. This zone here, as you know, is the demand zone. So another failure of the bulls to rally higher, another failure to hit the all-time high. Completely disregarded the fact that there is 1, 2, 3, 4, 5, 6, 7 days, a nice week, let's say, of an uptrend, of a moving from the lows of 91,901 towards 102,443, right? So within the 1 day we got the bearish engulfing pattern, and now the market is under the bearish pressure. On the lower time frame chart, like 4 hour, it looks really nice for the bears, because we went from the extremely overbought market conditions down towards the level of 37 points. Right now the market is trying to bounce, but there is not much here in terms of the support, unless there is some level at 196,236, but it was violated. And then of course the next one is 93,489. So big correction on the let's say on the Bitcoin. How much did we retrace actually? Let me just take a look. How much did we retrace the other way around? So this is here and this go here. So from the last swing to the upside, we retrace, well, a little bit more than 61%. So it's now or never. Either we bounce higher from this technical support, which is a 100 periods moving average on a 4-hour chart, and 61% Fibonacci retracement, or we go straight down below $94,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.